only find, okay, you can see a risk to reward ratio of like, let's say like 5 to 15, and like most textbooks would actually tell you that like, risk 1% to get 3%. But sometimes if you now risk 1%, there's a chance, if you risk 1%, it also depends on that, your stop loss now depends on that your 1%, right?
Yes,
Yeah, I
yes.
get you.
Yeah. So sometimes when you are risking 1%, there's a chance that it will eat your stop loss before directly going to where it's meant to go to. Are you getting my point at
Yeah,
all?
yeah. I'm getting your point.
So is it that when you look at markets that you know that, okay, oh, this one, it's 1% I will risk, but in your heart that probably, okay, oh, there is a supply, there's a demand zone under, and to first
Yeah,
it's that demand zone. But
yeah,
if
yeah.
before it's the demand zone, apparently you are going to be stopped out. Are
Yeah,
you
yeah.
getting me? So
Yeah,
like,
yeah, I understand.
is it like we leave that kind of market and like we must go for the ones that we know that, okay, oh, it
No,
is
no,
one
no. You are
percent
you
gone gone.
are you are getting it all wrong. Now, this problem is coming from your entries. It's coming from your entries. Now, your entry will determine, now your entries are determined by a few things, like I would say. Your entries are determined based on your markout. How did you approach the chart? Your markout. Did this play out or not? Did this happen or not? Like me, no breakout and retest, no entry for me. If there is no breakout and there is no retest, I won't enter. If there is no breakout and there is no retest, I would never enter. Possibly, I could be watching price at a Fibonacci level. So the thing is, you need to put into account of everything on the
I
chart.
did the industry they
You
come
need to
in.
understand that possibly your trend line or your support or your resistance, those lines, they are not the thing that determine you
Why this guy
your bias possibly to buy or sell. They are what determines the framework of the price trajectory you are looking at. So you shouldn't buy because of prices at a resistance or price at a support. Understand the framework, the
Hey
nature
bro,
of price
why
because of your
Nigerians
entries. I hope you grab.
Yeah, I do grab you. Yes, I do grab you. Thanks.
Okay. So we've got my big boss want to
if
ask a
you're
question.
there, instead of me you pray make the team work for us. We will show now we
Okay, good evening, sir.
now we the test now we will not come the I say
Sorry,
if I
good
want
evening,
to
sir.
go.
Yes, good evening.
Yes,
Rest on management and COT report. How
yes.
exactly do you manage that?
Sorry, I couldn't get your
Fundamental analysis
question.
doesn't necessarily give you a price range.
Sorry, I couldn't get your question. Could you come again?
My question in cost report
Yes.
and the risk you manage that. Considering fundamentals now doesn't necessarily give you a dollar figure as to how the market is going to react. Like
Yes.
you have
Yes.
no specific entry, exit, you have raw data that might out
Yeah.
immediately. Yeah.
Yeah.
So how do you manage risk using
Okay.
fundamental analysis?
Using fundamental analysis, like I said, the COT reports just acts as a confluence to my price projection. I literally want to know what the hedge funds are doing. That's why I implemented the concept of the COT report. Now, when I do my technical analysis, that is when I tend to look at the data reports. And it's in a compiled form, so I know who is gaining or which momentum shifted. Was it from the sellers to the buyers or from the buyers to the sellers? When I know the momentum that shifts, my stop loss or my risks will be based on structure, and I would do well to adjust possibly my lot size or position size to what suits my account and that risk I'm willing to put forward. I hope that's clear, sir.
All right, thank you very much.
You're welcome, sir. So to the next question, who's got another question?
Hello.
Yeah, I can hear
Good
you.
evening, sir.
Good evening.
Okay, that question. Actually, I'm new to the market. With the little period I've been in the market, I noticed something that when you want to place a trade in 4 hours, do
Yeah.
you have to analyze like 1 hour, 30 minutes, 5 minutes before you place your trade, and also a day and
Okay.
1 week?
Yeah, yeah. Let me break that down to you. That's the concept behind multi-time frame analysis. When I see people make trading
Okay.
decisions off a single time frame, the first thing that comes out my mouth is what the fuck. I'm sorry I'm using the F word, but it's what using. Why would you just make trading decisions based off a single time frame? You need to know what price has been doing, what it is doing, and what it will do. So you need to check previous, current, and possibly look forward into the future. Looking at the monthly time frame doesn't mean you have to buy from the monthly. You are using it to understand price projections. If you've gone, or if you are somebody on here and you've been watching my YouTube videos, you'd see from the start, if it's not from the top to down, I won't do analysis on it, because I understand the concept of understanding where is price coming from, where is it going to. So if you are a trader, you need to always take a brighter or broader look into price. You need to check it from the bigger structure to what follows, to what follows, to what follows, till you get what you are looking for. Then you settle for what you'll be using as your entry trigger, or the time frame using as your entry bias. So I hope that is clear, Christmas.
Right. This one
Okay.
as well.
Thank you very
I also
much.
have
Okay,
another
go ahead.
question, sir.
Yes,
Hello.
I can hear you.
Okay, like you place a trade for, like you place a trade to go long,
Yeah,
and the place is already running, but news broke out like what happened on Wednesday for the
yeah,
interest rate.
yeah.
After when you set your stop loss and take profit, do you alter your take profit because you feel the news going to affect, like you place Europe and US? Do you like cut your trade, or like remove your trade because of the news, or you leave your trade to run in case the news go against you? What do you do? What do you advise someone to do then?
In that situation, me, until I see a very tangible reason to either close my trade, or to adjust my stop loss, or to adjust my take profit, that is when I will take an action. If I don't see a reason, which to me, news is just a reaction in the financial market that sidetracks you from your attention. So, to me, knowing that the news is that, I would not even bother adjusting anything at all. I would not bother adjusting anything. I know the news is an attraction which sidetracks you from your attention in the financial market. So I would not bother to adjust anything at all. Only it just brings, news just brings fear. You see that massive candle and you see everybody reacting on it. It doesn't give you the direction. It just speeds up price like a catalyst. So it shouldn't be the bias or the basics of you changing possibly your trade values or willing to close a trade. I hope you grab.
Okay.
Okay.
Because there's something I experienced on Wednesday. I actually placed a trade. The trade was running, but immediately when the news broke out, within 5 minutes, the market was fluctuating up and down. And I noticed sometimes the market will drop from 1.2 to 1.5 at once. In that process, if you now your stop loss at 1.3, at 1.3, it will
Yeah.
easily like cut off your market. So are you now advising me like, okay, if I
Sorry, what did you
have
say? Wow.
like that, like if I'm expecting the broker age was like, which I know it is. Can you hear me? Hello,
Yeah,
sir?
yeah, I can hear you now. I can hear you now.
Okay, sorry for the frustration. Okay, like what I'm trying to say, or Wednesday I read something, I placed a trade.
Yeah,
Immediately after the news, within 5 minutes, I lost my trade. The thing
yeah.
just jumped to my stop loss because of the breakout of the news.
Now,
People were expecting that interest rate was going to be rise or low, but they didn't touch it at all. So the thing actually affects me. So what
number
I'm
one.
asking now is, if I have issue like
Yeah,
that
yeah,
next
yeah, yeah.
time, should that close?
I can hear you. I can hear you.
Hello?
Go ahead. Go ahead. I can hear you.
Can you hear me now?
Yes, I can hear you. Go ahead. We've got a lot of people on the call.
Hello?
Hello, I can hear you.
Oh, okay. I said on Wednesday I experienced something. I
Yeah, yeah,
want
I can hear
advice.
you. Yes. About the news, right? About the news. So literally about the news, you see, you didn't put into consideration every
Yes.
factor. You didn't put into consideration every factor. Like I said, you did not put into consideration every factor. Possibly there was a buy side liquidity that the news came to grab and you didn't know there was a buy side liquidity there, something for price to like grab, take you out before moving in the right direction. Is this common reaction we see in the financial markets that people tend to ignore? We don't try as much as possible to put it into consideration. So when next you are doing your price projection, always put that into consideration. Okay.
Can I ask you a question?
Yes, yes. Nancy, I'm very sorry. Nancy, you can go ahead.
Right. Thank you. So, this is actually a very funny question, but my friends and I have actually deliberated on it a couple of times.
Okay.
Okay.
Having a humongous
Okay, thank you.
You're welcome.
offers, does having a humongous account offer some sort of immunity? Because
Yes.
I've seen some persons that have huge accounts, and sometimes you see that most of the time they don't even acquire any loss. Sometimes when their trade is on the losing end, they can
Yeah.
just leave it, and then maybe days later it turns blue. Does having a huge account offer some
Yeah,
kind of
yeah.
immunity?
Number one, having a massive account has an advantage. I hope you grab. And number two, because of you have a massive account doesn't mean you should hold drawdowns like crazy. Number one, if your price projection is very valid, but it is just in a drawdown, you can leave it and hold it for days. Last year I held USD card for like 5 days. It was just hovering between my entry and the region of my stop loss till on a Wednesday. Yes, after a week on a Wednesday, it just kite to my CP immediately. So because you can do that on a huge account and also on a small account based on number one, on the small account, based on your risk management and how well your price projection is very much valid. I hope you grab.
Yeah, I do. Thank you.
You're welcome. So who's got a question next? So has anybody got a question?
Hello.
Yes, I can hear you. Go ahead.
Hello. Please, how do you do? I see this terminology running around in the forex markets community, and they say something like sniper entry. I mean, what do you think about
Sniper
that?
entries.
And
Sniper
yeah,
entries
not
are
do you do it,
just
please?
they are just on point entries, like on point entries, entries that have zero or less drawdowns. Zero or less drawdowns. See, let me tell you something. As a trader, sniper entry should be the least of your problems. Just make sure you get into the market and you catch that peep. Who cares about the drawdown? Just make sure the analysis is correct and you can ignore. See, if you try as much as possible to lay your efforts on sniper entries, it will end in premium tears. I'm being sincere to you because I literally tried, like, there's this ritual I always do. After my birthday, I go off the media for a month, try as much as possible to major into the financial market more, study more courses and all. So last year I did it, and when I came back, I was getting sniper entries and all. I thought it would be jolly right, all true. In the end, don't let me just say what I mean. It's now cruise in the end, now cruise. So that's just it. Like, don't try as much as possible because we see people catching those zero drawdown entries. It shouldn't be your aim. Your aim should be doing the right thing in the market, catching that amount of people and going away. I hope you grab. It's a $6.6 trillion market. The table is big. Everybody can eat. Okay.
Yeah, I get you. Well, that's it. Now brings back to that talk of like people with like small accounts and they're trying to get in at the right time and just like move on like without like they
Yeah.
want drawdowns, but not so much drawdowns. That
Precision
their
and patience.
1% accounts.
Precision
I've
and
even
patience.
seen people. Sorry to cut you short there. I've seen people
Yeah.
say like raising $100 accounts is like more difficult. Like raising $100 accounts like 200 is more difficult
More difficult.
than like it's more difficult
Okay.
to raise 100 to 200 than like 1,000
Okay.
to 10,000
No,
also.
I'm not trying to brag or I'm not trying to fluff. From March to June, I did $26 to $700 in a week. In a week, the proofs are there if you want to see it. The proof $26 to $700 in a week. But it was crazy. Yes, it was crazy. It was very, very crazy. Don't try it at home, okay? So About that small account problem and entries, you just need to be patient and be precise. Know that during the New York session and the London session, the mad moves happen. Know that during those period of time is when that your move will happen. Major around it. Okay? Okay, what are like the best thing to sharpen your trading skill in the market? Okay, your trading skills actually, do you want to sharpen it? Work on your psychology. That's the best advice I can give. Work on your psychology. Work on your psychology. Try as much as possible to define your own process, to determine your own process. I've been there before where I looked up to people and they literally want to push me into trading the way they trade, rather, instead of me discovering myself. So don't let anybody do that for you. Try as much as possible to discover yourself. Put in the time and the dedication, and you'd see things go right. So who's next on the question list?
Hello, sir.
Yes, I can hear you.
I heard you when you said you managed $27 account to $720 account. That was great.
Yes.
But sir, I want to know, how are you able to do, like, what lot are you using? Is it 0.01 or
Okay.
0.02?
It would be a story for another day, but let me quickly tip you in. So what I did was, I traded exotic pairs alone. If you are familiar with exotic pairs, you know they move crazily, like they move massive. So I
Yeah.
made sure I got in on time, and I doubled the lot size. I was over leveraging on the account because of I just wanted to catch fun. It was $27, like very small. So I had no feelings for the account, and that's why I was able to do that in a week. So I was just adding entries,
Okay.
adding entries, looking for every single trading opportunity and hopping on it.
This not well for me, but
But yeah, you
So
don't know that.
hello.
hello, I can hear you. Someone said
Can you
when
hear me?
learning about the market, there are things that cannot easily be learned and what is not needed. Okay, see, only you will define or tell yourself what do you need to know about the market and what you need not to know about the market. I can tell you a trading approach is shitty and you like it. I can tell you this is good and you don't like it. Like I remember when I started, I hated Fibonacci. Like I disliked Fibonacci a lot because of the YouTube videos I was watching. I was watching THEO. I love the guy so much. He's very simple. So he literally made me hate Fibonacci. But over time, I was like, why would I dislike this thing because of this person dislikes it? So I had to like define my own process and learn the right things I believe is right for me. Oh, I did not say I don't use support and resistance. Please, please, please. I use support and resistance the way everybody uses it, but I literally don't lay much emphasis on them. Everybody, like literally everybody, every trader buys support and sell resistance, but I don't do that. I don't do that. Like I don't just buy because of price at support and I don't sell because price at support or resistance. I look for further reasons, further confluences before I do that. Okay. So anybody who's got a question next? Who's got a question next? Who has got a question? We're still on the call. We've got 6 minutes left. So nobody has got a question. Okay, let me use this opportunity to give an insight into. Okay, we've got one question here in the chat box. Okay,
Hello, sir.
I said someone said the question. Sorry, let me answer the question, then I'll get back to you. I don't like using fundamental analysis because of my mindset towards it. I use the commitment of traders report data rather, and it does a lot of good for me. Like I literally explained it in the video earlier. Don't worry, the recording will be on my YouTube channel. You can watch it there, so we can actually accommodate more people to ask questions. Okay, who wanted to ask question the other time?
Hello.
Yes, I can hear you.
So, what do you advise a new trader to have in his diary, like his journal?
Your your trading journal, right?
Yes. Yes.
Just text me on WhatsApp. Like I don't know everything on my head, but it's in my free book that I wrote, the introduction to forex. Like I talked about journaling a lot. So at the end, I wrote out the things you'd need to have in your trading journal. So just inbox me, or yes, just inbox me. I would send you the book. It's a free book. Anybody on the call can ask for the free book. I would send it to you. Yeah, you sit down there and it's literally everything you need to know about the financial markets. Okay?
Thank you, sir.
You're welcome. So who's got a question next? Before I go into showing you guys just a few things I use on the chat. Okay, since we've not got any question, let me just tell you guys a few things I do on the chat real quick. It's very simple. I trade strictly price action and technical analysis the way everybody does, but I add a
Hello,
few
good
things.
evening.
Okay, good
So,
evening, Odogu.
hello,
Hello, Odogu, good evening.
good evening. Oh,
Yeah,
hello.
go ahead with your question. I can hear you. Hello. Wow.
Yeah, what's up?
Yeah, I'm fine, bro.
Okay.
Your network, I can't hear you. Your network is cracking.
What you're going to show us? Can you show us the break and retest you were talking about?
Okay, the break and retest real quick. If price was moving
Hello, Mr. Q.
good evening. A minute. Let's say price was moving in an uptrend, and this is our trend line. If a breakout occurs this way, now what everybody is waiting for is a retest, a retest back to this trend line. And yes, it's good to wait for this, but the thing is, you decide to ignore other factors, which is there is a possible zone here, which price could literally move down and retest here, then continue. But everybody looks to major into this move. So rather than looking to major into this move, why don't you just consider these two factors instead? If this plays out, fine, you get in on time rather than missing this whole move. And if this does come to the upside, you get in also. So that's the major thing behind break and retest, the way I do it. So Opis, you've got a question. You wanted to ask a question.
Yeah, good evening.
Good evening, bro. Trust you are doing good.
Yeah, I trust you.
Okay, go ahead with your question.
Yeah, there is a saying that's going on actually. So I want you to play about retail trader and institutional trader.
Oh yes, like that's a big controversy lately. Retail traders and smart money concepts, whatever you guys call it. Number one, don't let anybody intimidate you. Okay? Don't let anybody see. Smart money concepts, retail trading concepts, they both work. They both work. I would say this anywhere. They both work. Now, let me tell you something. Let me quickly do something crazy for you on the chat. You guys say there's something called order block. Abi, what does order block act as? It either pushes price or rejects price. What is support and resistance? Does the fact that you are calling it another name or trying to express it in a more complex form doesn't mean what other traders that do it the simple way don't know what they are doing. So to me, smart money concepts and dump money concepts, which is the retail trading concept, they both work. And yes, I was privileged to learn both concepts and I apply both. During my private time, I trade using smart money concepts. If I want to publish anything to everybody outside, I know not everybody understands the smart money concept. So what I do is I just publish the retail trading concept where I know smart money concepts and retail trading concepts can understand it. No problem. So, I hope I got you cleared on that.
Yeah, sure.
Okay, brilliant. What is smart money concept? Hey, okay. Smart money concept is a trading style. They call it institutional trading style. It is complex. Yes, I would not lie. It is complex. It took me a while to grasp those terms and all, but it's worth learning. Although you'd have to forget everything you've learned about retail trading, because if you don't forget what you've learned about retail trading concepts, trust me, you would get your mentality or everything you know about the market will be fucked up. You see a lot of things you're not supposed to see on the charts. Just like I remember when I was trying Stop pressing that remote, please. Okay, so I remember when I was trying to learn smart money concepts, trying to grasp the concept of Falcon, trying to understand the concept of Wall Street Academy, and trying to understand the concept of transparent